Okay, let's go across to someone then who can get us more perspective on whether or not this comes as a big relief. Shiv Puri, founder and managing director at TVF Capital Advisors, is right here in our studios. And Shiv, an initial comment really on this. This would definitely soothe some of the unnerved nerves out there. It comes as a relief for sure.
I think so, yeah. There have been some foreign investors who have been impacted or could potentially be impacted. There's been obviously a lot of information in the media, and there hasn't been clarity. And I think if there is some clarity on this subject, that this is not going to be an impact going forward, I think that is definitely a positive.
And on flows at large, I mean, you kind of briefly spoke about it, but and tying this in with what's happening across the emerging market pack in China as well. Yeah. I mean, we haven't seen too many countries do measures like this. It probably shake investor confidence to a certain extent, maybe. So for an EM specialist who is putting money into China, into other areas, now he has a choice wherein India is getting clarity or giving clarity on the MAT issue. China is actually exercising certain controls which are not heard now to stop the slide as well. Could this kind of shift the tide in favor of India ever so marginally at that, if it wasn't already?
I think that this is one of the factors, but there are even some other bigger factors that are first and foremost in the mind of foreign investors. One is that when is earnings going to catch up? The markets have had a meaningful sort of move, but the earnings have yet to catch up. So one is the sort of the domestic factors, the politics of some of the bills coming through, the land acquisition, GST, all of those kind of issues. Those are the domestic factors. MAT's also one of them, but I think those two would first stand out.
One thing that you don't do, Nikunj, when you talk to an airline is talk about good times. Somehow those airlines
that's a taboo
really haven't done too well. So yeah, but
you'll never buy airline stock, or have you ever bought airline stock?
We've never ever looked at the airline industry.
And no plans to buy.
And no plans to look at it. It's incredibly difficult and
I cannot imagine
industry.
the world without airlines. So it's one of the things which you need, but one of the stocks you never want to buy.
Yeah, it doesn't necessarily mean because it's something that you need that it makes a good business. It doesn't mean that it has high return on capital or high return on equity or something as an investor that you would like to hang on to. So it could be something that's essential, but not something that makes it very profitable.
As an investor right now, you're really hanging on to HFC stocks. When I say HFC stocks, home finance companies. Aren't you worried about the slowdown which is happening in the real estate sector? Are you not worried about the fact that rural income will come under pressure, agrarian economy is not going anywhere, which in a sense could have an impact on HFC sales, and it's visible now. 20% growth has come down to 15 has come down to 12 for HDFC.
So I would say that the housing finance companies, the ones that are the most attractive are targeting the tier 2, tier 3 markets. And out there, we are seeing absolutely no slowdown.
What do you own? You obviously own HDFC, but which are the other ones?
No, without going into specific names, the housing finance companies that are in these markets are growing dramatically. And I think the rural slowdown is there, it's real. But even in this environment, they're growing at the 20% range. There is a massive shortfall for housing in the country. We know that. The housing correction has largely happened in this tier 1 cities, and that too at the mid to higher end. Where you're talking in rural India, where the average ticket size is about 5-6 lakh rupees, or up to even 10 lakh rupees, there is absolutely no slowdown. I mean, the demand is still strong.
So then, do you actually migrate to companies in the housing finance space which are catering to that segment specifically? Because there are 2 or 3 of them who are doing that.
Most of them are actually have that as a big area of focus. The issue in housing finance is that there are some companies that are trying to become pan-India, or they're trying to grow too fast. And the problem with that is it usually ends up reflecting in asset quality issues down the line. So the attractive companies would be ones that focus on a particular area, because lending is a local business.
HDFC doesn't focus on a particular area.
Well, so HDFC focuses on a particular area, they on a particular sub-segment. They focus on the salaried class, they focus on sort of the mid to high end. Whereas these housing finance companies, a good portion of their borrowers are people who are self-employed. They don't have that monthly salary slip that makes it easy. So as a result, it has to be very careful on how you grow, what region you target, and grow.
Are you at the liberty to tell us where do you find favor within the housing finance space?
So again, I can't talk specific names,
okay.
but essentially, I think if one were to look at the number of housing finance companies that are there, and just apply a simple screen that says which are the ones that are saying, okay, we want to be very good in the west of the country, or we want to focus on the south of the country, and are trying to grow organically. I think those are much better than the ones that are trying to become national. I mean, if you look at successful businesses in the past, a lot of them have been built that way. Walmart, for example, which built a massive franchise, started with one store, understood the market, and then built the next store 20 miles away and built the global.
HFCs with a magnifying glass. That hint is not helping me.
Just want the name out and get him into trouble. Okay, so we come to healthcare then, and you've talked about in your notes that the recent correction has been a good buying opportunity. But again, that can't be a blanket buy, right? Because within pharma as well, it's such a stock-specific story.
It is. But the one thing that's impacted a lot of the good, high-quality pharma companies is the approvals from the US FDA have slowed down dramatically. And there have been some issues. There have been some lapses also on the part of the Indian companies in terms of their plants.
It's picked up again, though.
Not yet. I mean, some of the biggest names have yet to see the approvals actually come through. But I think if you look at where healthcare is today, it reminds me of IT services 15, 20 years ago. The chemistry skills in India today are probably the best in the world. And if a country like Israel can build such wonderful large businesses.
They're better scientists, let me put it this way.
I wouldn't say anymore. Yeah, they were also better in IT.
Come
on, ISRO. We're doing our bit. Come on.
Yeah, we've got Mangala and I think we've voted at what, $100 million.
Yeah, so we're effective. We've done well. Yeah, but you can continue. Sorry.
And no, I was saying, and some of the Indian companies have built a very successful track record of acquiring some of these assets overseas and creating a tremendous amount of value. So they really know.
Well, that's a solid hint. So we know what pharma company is talking about. Yeah, go ahead.
So I think this is a long-term trend, and as Warren Buffett says, the best time to buy a great quality business is when it's in a temporary period of trouble.
Lull,
and this is probably that period.
So pharma is that one space where it's not deep value, but there's definitely value which is there. I mean, a stock like Sun Pharma, if I think about it, folks, is down about 20% from the recent high. It went to about 1100 plus.
1200. 1995.
1200, it's come down to about sub 900. So, yeah, sometimes in a bull market also you get good buying opportunities.
But what else? What else? What else is in a temporary period of lull and could actually do well going ahead over the next 2 years, let's say, hypothetically?
Yeah, well, I'd say that not only necessarily a temporary period of lull, but also you have to look at companies where the competitive dynamics are changing dramatically. And I think people still underappreciate the dynamics that are changing in the banking sector. The gap between private sector banks and public sector banks is moving so rapidly that 2, 3, 4 years from now, it would look like, why weren't people looking at this space more? Let me explain. There are basically two things, big things that are happening. One is the obvious one, the balance sheet. The state-run banks have a balance sheet issue. They need more capital, they need better systems, they need better processes, and that's going to take time. Even if you infuse capital, it doesn't mean that they can start the cycle again. So the private sector banks have a 2-3 year window there. But more important, I think the digital divide is hitting banking sector very hard. And you're seeing some of the big names come up with some initiatives. But other than the largest public sector bank, we're not seeing that come from the rest of the sector. And remember, they're still 75%. Now, if this is happening, where the largest private sector bank is saying, we have more traffic coming through the internet, more traffic coming through mobile, we're going to not open that many more branches. The old model of banking,
saving. It's not no longer writing a check and making money.
Which is that I forgot which country. Didn't a bank launch operations without having a single branch? I'm missing out.
I'm missing out this one.
Yeah, okay.
I'm missing out this one.
But yeah.
But my problem.
And the final issue I'd say out here is the fact that this sector has a lot of regulation. So competition is always going to be limited.
But there's a restriction if you're a foreigner. The FI limit, with the exception of Axis Bank, I think it's frozen for everyone. So if you want to buy a bank and if you're a foreigner, you would say, what do I do? And I get a sense that that's the reason why a lot of foreign investors are buying into NBFCs.
Well, I'd say that, for some of these banks that there is a premium.
Yeah. You can buy in the FI window.
You can buy in the FI window. And so if you're willing to pay that premium. But I think if you have a 2-3 year view, I think this divide is going to get very large.
So do you buy the smaller ones? I mean, there is an IDFC which is migrating into a bank. There is a DCB which is a very small bank. There are a few others. Federal Bank which is growing up to be a bigger bank. Do you buy some of the smaller names?
I think in this case, it has to be a complete bottoms-up basis, because you have to first look at the balance sheet. The quality of the management is immensely important out in banking. So, market cap in banking for me is less important. First is the quality of the management, how they've built the bank so far. And so we look at it from that standpoint first.
So last we chatted with you, Shiv, you were pretty averse infrastructure purely because of a high debt component on their balance sheets. Has that view changed? Because a lot of experts nowadays that we're chatting with, they're betting big on this capex revival story, and thereby allied spaces like engineering, etc., is something that they're turning towards.
I think, infrastructure is a very wide term. You have the developers who build the infrastructure. You have some capital goods companies that make equipment that go into infrastructure. But if you look at the infrastructure space as a whole, it's a very difficult industry. And one of the reasons is that in India, the cost of capital, the weighted average cost of capital is about 15%. So for an infrastructure developer, to hit those returns is very hard, especially with delays or cost overruns or things like that. I mean, there hasn't been very many successful stories that have come out of that space. So to find quality businesses, which is the way we look at it, to find quality companies that have high return equities, that can grow for a long period of time, that are early in their life cycle of growth, and deliver, real economic value in the infrastructure sector is hard. Capital goods, there are a few companies that have those characteristics, which is a much better area to look at. But I still think that for the whole infrastructure cycle to start, you really need the government to push it, and you need them to infuse capital into the state-run banks. You need some more clarity on some of the reforms that need to happen. And I think that's probably 6 to 12 months away.
So if a client walks up to you after this interview and says, look, I'm impressed with your thought process, I'm ready to give you $100 million. But I want assessment, I want indication of where my money could be after 3 years. So what would be that communication? What would be that indication? What would be that commitment?
So in a roundabout way, you're asking me what my market view is in 3 years. Okay, so the answer to that is, I think that for the next couple of quarters, but it's only that time frame, the market's going to wait for earnings to catch up. But after that, I think the direction that things are going in, especially if monetary policy loosens further, which I actually think it will, primarily because the reason for high inflation was rural India, subsidies in rural India, and that's been curbed. So the source of inflation's been hit. Therefore, monetary policy should accommodate over the next year or two. Corporate profits are at 4.5% of GDP. They're at 30% below normal. Operating margins are at 10%. They are 30% below the long-term average, or long-term average is 13%. So you have that operating leverage built into the system. There hasn't been an upcycle where the operating leverage hasn't played out so far. So why would it be different this time? If all of those things fall into place over the next 3 years, I think the market has significant upside.
Shiv, we could go on chatting with you, but we're going to let you go on that note. Got to wrap up the show. Take a very quick break, come back, and we will talk technicals with Ashwini Gujral.